So for this video, we're just gonna jump right into it. There's gonna be no price action, no charts. I haven't gotten an update planned for my journey, but I have something which is very important to speak about and which I feel like you all would get knowledge, you all would benefit from. And what that is having a trading plan. So the resources that I'm going to pull out are not my own resources. However, I have used it and it has helped me a lot. So, well, let's jump right into it. But just to clarify again, this is not my resource that I created. This is something I found from Madcharts, who is a very good trader. And I found this quite early actually. He speaks, let's start over here at the beginning. He speaks of the importance of having a trading plan. Starts off with, clarity of direction, emotional discipline, consistent performance, and improved risk management. So one of the main things when you start off trading is that you have a detailed, clear trading plan. Because if you don't have that, what's going to happen is that you're going to have gaps in your system and you're going to try and fill in those gaps. And sometimes it's not always clear what those gaps are. So you might fill in something that does not need to be there, and that will just increase your learning curve, your time, and it's just not good because it could also lead you in the wrong direction. So having that trading plan guides you to guides you in the right direction. So let's go through it. But like I said, yeah, this is something that Mad Charts has created. I wouldn't force you all to go and look at his resources, but I would say his resources are very good. You know, I would definitely recommend them. So clarity and direction. Then he just speaks of the importance of having a training plan, and which is what I was explaining. He goes into more depth on it. So as you can see over here, it provides us with a guide ensuring we don't lose track, which is what I was saying. It helps us reach our trading objectives, helps us. The whole point of having this trading plan is to help us remain objective throughout the whole process of our trading journey. When we start, we have to understand at what level we're at. We have to have reasonable expectations, which is a big component. But yeah, that I will speak about more at the end of the video. So another thing which he mentions, like I said, emotional discipline. And this relates to what I was saying earlier about having realistic expectations when you start off and as you continue your journey, because often having these unrealistic expectations can play a lot in our head, and they often hold a lot of emotional weight within us and draw us away from being objective. And that's one of the worst things you can do as a trader, is to get rid of objectivity. And then he speaks about how it helps in terms of consistency. Like when we have that plan and when we stick to it, it helps us stay consistent because we have something that we can use. When you don't have a training plan, it allows you to be too flexible to be able to become profitable, because there's just too many factors that you can include. See, when you filter out all of that noise, you come down really to the core of things, core of your trading journey, and how you approach trading. And it allows us to be more consistent because we have set rules, we have set risk management, we have or defined risk management, we have set analysis methods. Excuse me. Yeah. So let's look at that. So now he speaks about the key components of a successful trading plan, which is your market analysis, your trading strategy, and your risk management. So a lot of people might question, okay, where do I start? Well, the truth is, if I had to approach this, and from what I've seen, is that you definitely do not start off with your strategy. Your risk management, you can start off with first. However, the problem with that is you don't have your basic analysis. You don't have a way to even just come each morning and to look at the charts and have that set where you say well I'm going to first start off with a top down analysis, then I'm going to add like my EMAs or VWAPs or whatever, and then I go into you know your obviously you go into your strategy to if you are seeing and if the market is presenting trades, which is the main thing. If the market is presenting trades, so like I was saying, market analysis first. So the way to approach that, if you're not sure how to like come up with a market analysis method, or even if you do know, I would advise, go and looking at all these guys who you know are performing well, like Lambo Raul. Go watch Mad Shots, you go watch Q Banks, and you spend time watching how they analyze, and you see which one resonates with you, which one you are able to carry into your own like analysis session, and the one that you find the easiest and the most understandable is the one that you start off with. Now, obviously, you don't stick with it your whole life. What you do is, you just want to get a starting point. You just want to get a base so that you can iterate and, make it better, of course, to fit you and your schedule and everything. So that's your market analysis, your trading strategy. So this is where you could also use guys of YouTube. Like there are people who take setups based off similar, there will always be people who take setups based off similar analysis methodologies as you, even if it's not completely the same, but they can always be used as guidance, or even sometimes, you might miss something that, let's say, Q Banks mentioned, and you can implement that into your own strategy. The next is risk management. Now, the reason why I'm saying risk management comes last is because when it comes to risk management, you need to understand your what your win rate looks like, what your average risk to reward looks like, in order for you to be more in depth on that. But what I can say is this. What I can say is that you can start off with a base of like 0.25% to 0.5%, when you're starting out. That usually, that's how I started, and I feel like in terms of risk management, that was that's something that kept me going. Is I started off with that. As I built onto that and developed that, I found better risk management systems. But yeah, the main thing is that this needs to be complete. This needs to be complete. This not needs to be complete. Well, not really complete, but you need to have a good baseline for each of those components in order for you to iterate and, of course, make it better of what you and suit you. This is a very important thing that he mentions over here, which is your trading rules. Trading rules can become very complicated. Well, trading in general can become very complicated, but the idea is to keep it as simple as possible. And the reason being is because when it's simple, it's a lot easier to follow. When there's a lot of complications, there's a lot of playbook setups, when there's a lot of strategies, methods of analysis, the problem becomes that there becomes a lot of points where you can deviate from. And essentially, what ends up happening is you trading a totally different strategy. You're analyzing the markets totally different compared to your method of analysis. And then, yeah, and this is something he mentions over here is specifically with your entry rules. Establish clear entry rules that determine when to initiate a trade based on predefined criteria. So you have to have your predefined criteria, price action, technical indicators, as this guides us into seeing if the market is presenting us with the opportunity to be in a position and see our position play out. The next is your exit rules. So for exit rules, it's you define your market conditions in which you do not want to hold the position for longer. So this is similar to your entry rules, where it's basically like you find or you have filters in the in conditions that tell you, okay, you know what, this might not go further than what I'm aiming for, or even, exit rules can apply to stop losses, which is, okay, you know what, I do not want to lose more than I should. I do not want to risk like X% more, or the market's not, it's clearly not giving me that opportunity, and it's clearly showing that it's just going to take out my stop loss. Position sizing, this one is related to your risk management. Once you have your risk management set, position sizing is quite easy. Trade management is a bit more, can be a bit more complex, but the basis of it is it includes your entry rules, exit rules. That's the basics of it. So now he goes on to talk about proven trading strategy. So this is something that you can implement. However, this is a bit basic, breakout trading, technical analysis, trend trading, fundamental analysis. So basically, what the breakout trading requires is that you have a clear range. You have a breakout, you can either take it on the breakout and, you know, see what happens from there, or you can, once it breaks the range, wait for the retest and rejection, and on the confirmation of that third leg, then you can look to get in the position. The problem with the first one is the markets are not always in textbook conditions, so there are a lot of fake outs, especially if you trade like that now during these market conditions. There's a lot of fake outs, which I would personally go for the second. Technical analysis, which is basically, you have your own technical analysis where, let's say, you have a range and prices in that range, and you have a strategy where, like, for instance, price rejects, makes a doji, and confirms with a third 5 minute candle, then you get it in, stop loss above the high, and then, TP right down. That's dependent on you. Trend trading, simple textbook strategies, is you're looking for going onto your high time frame, you're looking at your overall bias. Are we seeing, is price bearish, bullish, or ranging? For trend trading, you only want to focus on bearish and bullish. You can't really focus on ranging markets if you want to trade the trend. But you can go down to the low time frame if you find the trend up there. Problem is, adds too much noise back into the markets. So yeah. And then of course, we cannot forget our fundamental traders out there. These are the types of people who, or these are the types of strategies which would require you to, you know, watch CNBC, for example, or just stay up to date with the news and trade based off news. The problem with this is, you see, this, if you're going through the the prop firm route, is that it's very limited in the sense that you cannot trade red folder news on almost all prop firms. So I would recommend you do not start with creating a fundamental strategy. That can be something you implement, but at the end of the day, you know what? There are certain accounts which you can get which allow news trading, which is, your swing accounts, which generally, since you're gonna hold the trades on for longer, they allow you to go and trade the news and be in a position while, news plays out, while FOMC or NFP plays out. Emotional intelligence in trading. So this is a big thing. Emotional intelligence in trading, because it is extremely hard to stay objective all the time. So when you struggle to stay objective, this is where emotional intelligence comes in to level the playing field, to keep you at that base that you need. So it talks about, basic control fear and greed, manage emotions, embrace patience, accept loss. This is a big one, is patience. What you need to understand is that patience is a very important thing in trading. Because trading, the way trading works is, it's not like you step on the charts the one day and then the next night you just at this level. What happens is, it's a long process, for some people, and then eventually you start to, do well. I mean, for some people, they struggle at first and they do a little bit well, and then they end up struggling again, and then they make it. And another important point on patience is that you should not judge yourself based on what you're seeing on social media and YouTube and everything, because you do not know the journey that they took. All you're seeing is this guy stepping onto the charts, he's calling a trade, and he makes $3,000 or $20,000. But yeah, on to the next thing. Continuous improvements and adaptation. So you need to track performance, review strategies, seek feedback, embrace change. So this all relates to journaling, and these are all important factors because they will allow you to improve, get better each day, and that's how the game of trading works. Is you need to view it as there is no final destination. The point of trading is to get better each single day, Just go back to that. The point of training is to get better each single day, just 1% better. If you can stop making the mistakes you made last week or the last month, you will get better if you just do that. That's the whole point. Yeah. I hope this video helped you guys. I hope that you know you'll find a lot of value in this. But yeah, thank you for watching.